Hi and welcome back to Inside ETFs 2020. I'm joined by David Kotok. He's the chairman and the CIO of Cumberland Advisors. Thanks for being here.
Nice to be with you.
And so you at the conference spoke about ZIRP. Can you just first define that for us?
Okay, ZIRP, Z-I-R-P, Zero Interest Rate Policy. NIRP, which is part of my presentation, Negative Interest Rate Policy. Let's use NIRP or ZIRP. They're four-letter words, you know.
And can you briefly discuss the negatives and the positives of ZIRP?
Well, when you take the interest rate to zero, and you keep it there, and you keep it there, and you keep it there, you destroy the returns to savers. You distort behavioral financial thinking. In the beginning, people don't believe it's going to be that way for a long time. But after a while, it changes asset prices, it changes their behavior, they can become accustomed to it, and the policy-making central bank or government gets trapped in a way in which they can't get out. And that's where we are now. We've been in ZIRP for over 10 years. We've been in negative interest rates, NIRP, for 5 years. And the central banks of the world, the major economies of the world, are now trapped in that paradigm. And getting out is very, very difficult.
So you briefly mentioned the government there. Do you think politics, especially in the US, will continue to influence ZIRP?
The politics in the US by the White House are to bash the Federal Reserve. So the president regularly tweets criticism of the Fed in very harsh ways. The Federal Reserve has tried to maintain their independence. They've tried to maintain their balance. They have not responded by getting in a brawl with the president. I hope that continues. I hope the Federal Reserve behaves like they have been behaving and makes policy independent. I wish the president would stop his behavior. I can't control that. He is having no impact on the setting of interest rates and policy, but he is introducing a risk premium because of his behavior, which affects other asset prices negatively. So, do I think the policy of the Fed, which is not zero, but to stay above zero, will continue? Yes, and I hope it does. And do I think the politics will criticize the Fed and continue? I expect they will.
And then finally, do you think that ZIRP has a direct influence on clients, and how does it affect them?
What happens with zero interest rates, even more so with negative interest rates, is it drives investment decisions to find something else. So investors chase yield. They ignore credit quality. They get lower and lower credit, and they get tighter and tighter spreads because they're doing anything they can to obtain some higher return. The other thing is when you lower the financing cost of things by very low interest rates, and you keep them there and keep them there, you raise asset prices, all kinds of asset prices. And we see that taking place in the stock market, in real estate, in collectibles, you name it. So the impacts and distortions from very low interest rates are at work in our financial markets and our economy. And they have been at work for a dozen years. I'm an old guy in this business, so I was around for a while. If you look at the financial professionals in the United States today, the ones who are under 40, that's half of them, have never experienced firsthand higher interest rates above the rate of inflation. They do not know it except from a textbook. I wrote a couple of those textbooks. And I will say that the experience of it is much different than what you read about in a chapter in a textbook. That's ahead of us, and I'm very worried about the transition when it occurs.
Well, David, thank you so much for giving your wisdom here today.
Well, I don't know whether it's wisdom or not, but it's a pleasure to be with you.
Thank you.